Okay, good morning. Good morning. Nice to be with all of you. I'm Kumar. I'm the president and editor-in-chief at Devex. It is always tough to follow Mary Robinson, and as usual, she, I think, laid it out just right for us, the stakes. And I saw her wearing an SDG pin. I see a lot of people in this audience, including people on this panel, wearing that Sustainable Development Goal pin. And it reminds me, I was actually there when they ratified the Sustainable Development Goals 2015. I was on a stage somewhat like this, moderating a session with fellow journalists who were asking some leaders about what do these Sustainable Development Goals actually mean. And one of my panelists was Bill Gates at the time. And toward the end of the session, a journalist said, you know, they're estimating that to achieve the Sustainable Development Goals, we will need hundreds of billions of new dollars per year, maybe up to trillions of new dollars per year. Is any of this really realistic? And Bill Gates looked a bit annoyed by the question, and he answered with just 3 words. He said, what about innovation? And I've thought a lot about that since then, and the truth is, even in 2015, when we had 0 interest rates, before the Brexit referendum, before the election of President Trump, before the election certainly of 2024, even then, we knew we needed the private sector. But now it is abundantly clear that we need the private sector, that innovation has to be driven by maybe the people on this stage with me. You know, if global development in the last century was about engineers literally building bridges, literally doing civil engineering work, I think this century's development is about financial engineering. And as we've heard, some of it has moved a lot slower than we need, but there is progress. We're going to get into today what it takes and where we are. Maybe it's not just engineers, maybe it's actually sustainability officers, because we've got a panel of chief sustainability officers from around the world who are going to tell us sort of how they are doing on aligning finance with sustainability goals. And I just want to get us going into a conversation, if I can, along those lines. And maybe I'll start with you, Anja, if I can. Anja Hannerz is the Chief Sustainability Officer of Nordea. And we've heard a little bit of reference already this morning to this issue, and I know yesterday it was brought up quite a bit. But the truth is, the world in many ways is relying on the financial sector. And you have to think out into a different time frame than maybe political actors do. You have to worry about whether projects you finance today will be resilient, will be able to survive in a very different era, in a warming planet. So how are you thinking about this and working at this as someone who's come your entire career out of the finance sector?
Sorry. Well, Nordea, the bank where I work, is the biggest financial institution in the Nordics. We have about 500,000 corporate customers and some 10 million private customers. And we have worked in this Nordic region for about 200 years, supporting local societies in different stages of societal change. So the sustainability transition is the most urgent and pressing change that we're seeing right now. And this makes it really simple for us to define our why. And we see it in 3 different parts. So the first one is the corporate transition. This is how we support corporate customers in their transition planning. We provide finance supporting their transition and advice that incentivize their movement in their transition. So that's the first step. The second one is then the impacts the corporate transition has on our private customers and the public in the markets where we work. So this means the people who are employed in our corporate customers, who buy and are reliant on the services and products of the companies that we work with. So we support their financial well-being by pushing the transition for corporates. And we can also incentivize our private customers through green mortgages, energy efficiency loans, and sustainable savings options. So that's the 2 focus areas for us in our business. And then, of course, if we advise and support our customers in becoming more resilient to climate change and to nature degradation and the impacts that might have on their financial status, that, of course, lowers our inherent risk as a bank and makes us more attractive as an investment, gives us more opportunity to actually be the catalyst in providing finance towards the green transition. So we call this a win-win-win. It's good for our customers, it's good for society, and it's good for us as a bank.
And it is good business for you, even now, not just good business in the long run. Is that right?
No, absolutely. It's a huge opportunity. And it's because it's really simple. It's not rocket science. We work with our customers in making these incremental steps every day in improving their sustainable performance. And that's what we do best in managing their risks and thereby managing our own risks.
Thomas, maybe I can get you into the discussion on this point. Thomas Brauchle is the head of sustainability at Siemens Financial Services. You're sort of the B2B financing arm of the giant conglomerate that is Siemens. And you're thinking in these terms too, especially given the work Siemens does around the transition and helping companies transition. Is this kind of offering that you have, which is similar to Nordea in a way, is it mostly an ESG drive, or is it really just a business proposition from your perspective? Or are those two things really no different now in 2024?
So thank you very much for having me. I think when coming to Siemens Financial Services as the captive financing arm of Siemens, the technology company, technology plays a role. Technology is the business, yeah? And now I think when we comes to the challenges of our times, we know that for most of the challenges, for most of the levers that are kind of making the net zero transition happening, we have the technology. They already exist. So think about renewable energy increase, think about electrification, think about energy efficiency. These are the three key levers by the IEA. Most of the technologies are there. Oftentimes it's about the financing and also the customized financing for our customers. So in the end, coming to your question, it's a sweet spot where business and sustainability comes together. So for us, sustainability business is profitable business in the long term, and we do see huge opportunities in the whole field of sustainability.
I think this is one reason why people, maybe even some in this room who work in this space, are frustrated by the pace, right? Because they see such an obvious gap. There's all of this money on the sidelines. There's trillions of dollars in pension funds and savings ready to be invested. There are technologies that can help companies transition. There are renewable energy and other kinds of energy efficiency technologies. And somehow yet, bringing those two things together turns out to be slow and painstaking and hard. Why is that?
I mean, this is, I think, the biggest challenge, yeah? To accelerate this, I think what is required clearly is a level playing field, yeah? So things like global standards, global frameworks, a level playing field for kind of banks like Nordea or all the others. We are global banks. We're operating in more than 60 countries, yeah? So it is required to have a level playing field, also to allow these risk-sharing mechanisms Remy kind of mentioned in the previous session. I think this is key. We are progressing, but all the political developments currently are not very stringently directing in one direction. Let's put it like that.
Yeah, and that makes it hard, right? Because we're talking about market mechanisms, and when there's uncertainty, when there isn't one clear standard, you can see how it's hard for a market to start to move. And maybe we can get into the specific example of the construction sector with you, Antonio Carrillo, who's the Vice President of Sustainability at Holcim. Construction is one of the biggest polluting sectors in the world, also one of the biggest opportunities, and something your company has leaned a lot into. But it makes me think of Thomas's point about a level playing field. Because if there isn't a level playing field, you know, the bar can be lowered, and people can say, well, I can build cheaper if I don't build in a sustainable way. How do you think about that as a business that's thinking long term?
Yeah, thank you, Raj. So indeed, the built environment, as we call it, is responsible for I think it's well known, 37% of global greenhouse emissions. It's actually interesting to see that when you look at the differences, only 10% is associated to the direct emissions of building materials, and 27% is about the energy that those buildings consume.
The operating costs, right? The lights and everything else.
Absolutely. So you have really like a fragmented value chain that policies are not always tackling at the right pace. So you have a very fragmented value chain within the built environment, but you also have a very fragmented value chain in the way that regulation works. I couldn't agree more with Thomas about the play level field, especially when it comes to carbon markets. Obviously, you have Europe where the EU ETS has been decades being improved, being fine-tuned, and to get into a regulation scheme with the European Innovation Funds, there's a lot of governmental approach. And there are other markets where those regulations are not that much advanced. I think what this needs is companies to take the courage to really have decarbonization roadmaps at the heart of the strategies and to push. There's a lot of innovations, and I would agree with Thomas, there's a lot of innovation that require financing, and for that there are plenty of mechanisms, ESG-linked bonds, green bonds, et cetera, et cetera. There are other innovations that you could actually achieve with own capital that actually bring good avoided costs, and also expanded margins in the market. I think in general, it is a fact that built environment is one of the main contributors to those externalities or impacts, but it's also one of the main sectors that are actually driving the agenda towards building better with less. I think this building is one of the examples how we used to build in the past. Probably we will not build the same building these days.
I think that's right. And the other reason it's so important, and this building is a good example, is the built environment lasts a long time. So the decisions you make now are going to be with us a very long time. And that's why getting the market right. I know Patrick talked about it in the beginning, and he and Eric have said, in some ways, this political moment is just a moment, and we're looking much beyond it. But on the other hand, there's a lot that will happen right now that will determine how much we are emitting in the future. Shargiil, maybe I can get you into the discussion now. Shargiil Bashir is the Chief Sustainability Officer and Executive Vice President at the First Abu Dhabi Bank. And maybe you could just tell us more about your region. Obviously, you come from a region where there's a lot of fossil fuel production. You're banking and financing in that region. How are you thinking about the energy transition at the regional level when you deal with sectors like the fossil fuel industry?
Thank you, Raj, for the question. Thank you very much for having me. So I think in the region, when we look at the Middle East, is definitely transitioning. We saw back in 2021, UAE was the first country in the region that committed to net zero, was the first country to ratify the Paris Agreement back in 2016. So a lot of focus has been going into transitioning. We saw this also at COP28 when the UAE came together, showed the leadership and tried to bring together and got the UAE consensus agreement, which was transitioning away from fossil fuels as well, which is a significant step to take when you are from a fossil fuel economy. And we've also seen since, for the past 10 years, the growth in the region and the investment going to the renewable energy as well. When you think about it today, one of the top 5 biggest companies in the world in renewable energy is from Abu Dhabi, which is Masdar. So we are seeing significant investments going into sustainability and renewable energy. I think the region has a very clear direction that you want to continue being the energy leader in the future as well. That energy will not be fossil fuel, but will be renewable energy. So what is it that we do? And as it was mentioned, a lot of investments are going into innovation. We are seeing hydrogen plants being built in the region as well to taking those steps from that perspective. We've seen the growth significantly happening in the renewable energy. So if we go back 10 years, the renewable energy level in the region was around 1 gigawatt, and the ambition is to be above 100 gigawatt by end of 2030 and continue significant investments in that. So the transition is happening away from fossil fuel, but we also need to remember that it's not an on-off button, right? We can't just say that, we just take away fossil fuel overnight and suddenly we're just gonna move into renewable energy world. It doesn't happen like that. So that transition is required, and as we have seen with the geopolitical situations over the past couple of years, we also need to ensure energy security as well. which is a very important topic as well. So how do we ensure that we can transition to more sustainable and renewable energy, but in a secure, in a sustainable way? And that takes investments, where the financial industries has a key role to play. And it also takes collaboration between the public sector and private sector coming together to say that how can this transition look like, because the financial sector cannot do it by itself. We also need the policymakers to come and support from that perspective. And I think that we are really seeing the willingness and leadership in the region to say that that transition needs to happen, and we as policymakers are here to support that transition. And I think that hopefully we will see more and more regions moving into that direction, and where the policymakers can start supporting that transition.
I think it's a good point that a lot of the action can be at the regional level, because very often you're talking about energy markets that operate regionally. Of course, there are some countries big enough, but often these are regional questions. And if you have the right policy environment at the regional level, if you have the right kind of business investment and platforms like the ones that are representing us today, the Building Bridges platform and the UNEP FI, there is a chance to actually create that market and move it forward. Maybe the same thing applies to insurance. Claudine Blamey is with us, the Chief Sustainability Officer at Aviva. Insurance was sort of maybe the sleepy backwater for a long time in this discussion, and now I think it's the front, it's the vanguard, because so much of what we're talking about really are questions of insurance, that we know what the risks are going to be, or we have a sense of what they are. How do we protect against them? Well, it's the tools of insurance that are increasingly talked about in this context. So where are we in that conversation from your perspective?
Good question. Yeah, I'd agree. I think the insurance sector, compared to the investment world, hasn't been talked about as much. Although I do think there's been a lot of work going on in this space. We own risk, right? We understand risk. And a lot of this is about risk management. Whether it's your own operational risks within your own companies, we've heard some of that today, or in terms of risk, in terms of climate impacts, which we're seeing more and more of. So it's impacting our business today. Flood risks, they're increasing. We think, according to our models, will be increasing 0 to 4% every year, year on year. So you can imagine that that's going to have an impact on insurance pricing. It's going to have an impact on claims, and it's going to have an impact. We've seen in the US, a lot of countries the insurers have pulled out of, because actually they can't measure that risk. That risk just doesn't work anymore for them.
And that 0.4% is probably not an average. It's an average across the world.
It's an average.
But there will be places where it's very concentrated, and some of those are places with very high value real estate.
Yeah, exactly. So I think on the other side of the coin of that is that we have to work with the companies that are our clients, or individuals that are our clients, which we're doing so already, thinking about how do we make them more resilient, and actually stopping that risk of claim becoming a risk of claim in the first place. I think that's what we're trying to do. We've got lots of examples of that that we've done, working on with technology, on understanding how much flood there will be in that area, and when that flood increases a certain amount, the insurance is paid out automatically. And those are the sorts of things we can start to think about, as well as working with areas that are high flood risks and preventing that flood from happening in the first place, or if it does happen, preventing the damage being too much. And we've seen about 64% decrease in those claims where we have done that kind of thing. Working on the investment side as well, because we have we're a big investor, £376 billion worth of investment. Again, it becomes about stewardship, really working with those organisations to really understand them. No point in completely disinvesting and saying that that's what we're going to do, because that's just paper decarbonisation. And so really working on those, and we have disinvested in some cases. We have policies around this where more than 5% of organisations' revenue is from thermal coal, for example. We have given chances to those organisations. We have worked with them, but where they breach that, we have disinvested.
And are those policies that are unique to Aviva, or we've heard a little bit about the need for this industry-wide standards and a level playing field, or are you looking to other regulatory bodies or voluntary bodies to say, well, that's a standard they've set. If there's more than 5% of revenue from thermal coal, we can't fund them?
I think we were one of the first to do that. We are still, I think, the only financial organisation who have an ambition to be net zero by 2040. So we've been pushing the agenda a lot harder, I think, than some others out there, but I think it's becoming the norm now, where there are exclusion policies in place. What I would love to see is governments having transition plans. Because once those transition plans are in place from a national level, then you can start to see, okay, so what do I do in my sector to respond to that transition plan? And I think that's what's missing at the moment.
And I guess I wonder, Anja, you brought this up earlier, the idea of getting everyone aligned, which is obviously what building bridges is all about. Why does it matter? If this is a comparative advantage for Nordea or for Aviva, isn't it better for you to just go it alone and say, we're going to be even tougher than our competitors on this, or we're going to go further out on the risk curve? Well, why is it important that this becomes something aligned across the industry?
Well, it's because, yes, we are competitors in a way, but in this work we are partners. We share the same long-term ambition, and therefore we need to work together. And the question of level playing field, I think, is super relevant, and definitely both in the European Nordic versus rest of Europe context, but also Europe versus the rest of the world. Harmonization of standards and what kind of impacts the new regulations such as CSRD might have on European companies and their competitiveness, that's of course really high on the agenda. But, and I said to you earlier, is this a dream world, this global harmonization, standardization? Can we really achieve it? And I really hope that we can, but in the meantime, we cannot be inactive and wait for that to happen. So we need to take the steps. We need to just accept where we are in the transition and start from there. And that reflects our strategy towards our customers. We support customers in different stages of transition, not just the final steps to get to net zero. And we recognize that some companies, they are not mature and ready to make a long-term commitment, but they can still do things. And in some instances, the first steps on the transition are the ones that really have a positive impact on emissions. So for us, it's about bringing the society and the societal transition with us and the value chain transition, not just cleaning our own balance sheet, but getting everyone along. And that's why it's so important that we collectively have this view that we really want to not gain a competitive advantage by pushing the problem over to someone else, but by doing this and really having an impact on the economy.
Yeah, I think it's interesting that you think about it both at the customer you have, but also their customers, and trying to reach all the way through that value chain, which is where you get significant economic change. What do you think, Antonio, of this idea? We don't want to make the perfect the enemy of the good. That, yes, you might know what the perfect construction, net zero construction approach might be, but not everyone is there yet. It might be hard to finance that. Do you think in similar terms about there are steps we can take today that are more realistic?
I really think so. I think in our sector, we've seen, Holcim, we want to believe we've been a first mover in having, for example, science-based target aligned with the 1.5 in 2030, in 2050, the launch of low-carbon cement and concrete around 2020. It's not that far ago, and today those represent a good percentage of our global net sales in the order of 25% for both segments. We've seen how our competitors have actually gone the same direction, and I mean it's obviously good to have a first move in this landscape. It brings a competitive advantage, but it's also good that everyone follows, so it really create a mainstream. Otherwise, it really gets an issue. We're talking here about drastically changing the way we do business, and for that you really need a scale.
Where does the demand come from, though? I mean, green concrete is much more expensive. your customers, it sounds like, are demanding that now from you and from your competitors.
Yep.
Why? What's driving them to spend more?
Two things happen here. One is one of a false kind of understanding is producing low carbon or more circular not always is more expensive. Because you do a lot of, at least we reuse a lot of wasted resources from other industries. Sometimes we even get paid to manage those waste streams that we can actually repurpose in our production lines to basically reduce extraction of virgin materials. That actually helps us to reduce costs. And there is a premium in the market that our customers are willing to pay. The premium, where is it coming from? You have mainly two or three streams. One is you have first movers also down the value chain. We're talking about real estate or even the techs, especially in North America. They're willing to reduce their Scope 3 emissions that potentially come mainly from the concrete they use in the data centers. So they're willing to actually pay a fee for having a lower carbon concrete or building material that is actually reflected with an EPD. That's another important aspect on the certification of this kind of carbon footprint through environmental product declarations. And then you also have labels that apply also for buildings, like LEED, BREEAM, that actually require this sort of certification. And eventually, it's kind of a blockchain system. You are very clear on what actually you're buying and what's going to be the footprint of the full building when actually it concludes. So these, I would say, are the main two kind of streams that actually bring demand. There are also coalitions, partnerships, I think it's been mentioned. First Mover Coalition, they try to connect these dots in the value chain and endorse some of these requirements, and obviously we're part of that as well. I think it's a good initiative, so actually connect the dots.
It's a good example where even with all the ESG backlash, even with the lack of a level playing field, the private sector can do a lot, right? So you're talking about companies that have a lot of the big tech companies, for example, that have said, we make a commitment. Now, why are they making that? They believe it, their employees demand it, their customers demand it, and so they say, we're gonna make a commitment to this. Then they spend more for green concrete. That helps build a market for it. It allows companies like yours to develop that market. So there is real potential, even in a moment when there's a lot of backsliding on these topics. Thomas, what's your thought about this?
I completely agree, and I just wanted to pick up one topic you mentioned. So I think exclusion is important, yeah, and we also do have exclusions. What works, I think, in at least in internal conversations with the colleagues from the business better is seeing the opportunities. So there are lots of investment requirements needed, yeah. It was mentioned in today's first session, kind of studies from the IAE talking about trillions, yeah, on building up renewable energy capacity. The European Union has a very ambitious plan to come to net zero, which requires a lot of investments. So there is a lot of investment opportunities. So not talking about what we do not do as a business, but also talking about what we can do and what we actually need to do, need to accelerate in providing financing for. And climate action, it's clearly about decarbonizing energy, the energy system. Yeah, it's about decarbonizing, we call them hard to abate industries. Pretty sure you all know them. Concrete is one topic. Yeah, steel is another. So humanity will not have the same living standard without these kind of very important industries, but they are hard to abate, yeah, and helping kind of these industries to produce steel, to produce cement based on with low carbon technologies. I think this is key. The third one is decarbonized transportation. We see it in our private lives, but also kind of on a broader level. Electrification of rail, of public transport, of private transport. These are huge investment fields. So I rather tend to focus more on the investment opportunities than what we're not going to finance, but both are equally important. So I'm totally with you. Yeah.
Well, and I think by excluding some kinds of companies or some kinds of investments, it could, in theory, push those businesses to say, well, the cost of financing for me is higher because I can't get these kinds of capital sources. So I should be willing to seize some of those opportunities, at least in theory. But that's where the level playing field, I guess, is important. Maybe we could talk a little bit renewable energy in that context. You brought it up, Shargiil. So maybe, it seems like I sit on these panels and hear people say, solar is now cheaper, including places like Abu Dhabi, which has significant solar capacity. It's now cheaper than incremental fossil fuel. And yet, there still is tremendous fossil fuel exploration and production happening all over the world. So what is missing there? Is it a financing gap? Is it something else?
I think, first of all, we just need to recognize that renewable energy capacity globally is not at an equal level. When we look at the global south versus global north, the capacity isn't nowhere near where it needs to be. And also, the usage of energy in global south is nowhere near of global north, right? I think there was a recent study that concluded that in Africa, usage of energy per individual is around 20% compared to global north, right? And we know that the energy demand is only going to increase as well, right?
In many ways, energy is development.
Exactly. So first of all, I think that's the challenge we need to recognize, that we need more energy and we need less emissions, right? And I think that's the combination we need to find in a good way to say that how can we ensure that we make more and more energy available at the same time that we keep reducing emissions. So, and again, it's absolutely right that we need to invest significantly more in renewable energy, whether being solar, wind, hydrogen, etc. Even nuclear energy is being invested in now significantly as well, might play a role. And at the same time, we need to make sure, because as I said, it's not an on and off right now, right? Because if we just turned off fossil fuel tonight, tomorrow morning, imagine billions of people will not be able to continue their daily life. That's the fact. So we need to ensure that even the fossil fuels that are being used right now needs to reduce emission as much as possible, right? So that's also a path until we build enough renewable energy capacity globally to ensure that we can make this transition in a good and sustainable way.
I think there would be a lot of agreement with that, but I also think a lot of people say, well, why are we building more fossil fuel capacity right
Absolutely.
now? Right?
Yeah, and I think that's where it's important that for how much money goes into fossil fuel, 3, 4, 5, 10 times more needs to go into renewable energy, right? So as an example, as us for First Abu Dhabi Bank, back in 2022, we set a target that we wanted to facilitate more than $75 billion into sustainable finance by 2030. At COP28, we increased that target to $135 billion. And just to put that in context, that's 50% of the commitment made by the UAE banking sector. Of that, we have achieved around 40% in the first 2 years. So the demand is there, and we are able to provide that financing. And a lot of our peers, is not unique to FAB, a lot of our peers are making financing available for renewable energy. And that's why, and even more needs to be made available, right? And we also need to many more of those projects coming through as well. And again, coming back to my previous point, a bit of support from the policymakers will help as well, right? Because right now, some of the challenges we face on hydrogen projects, as an example, very long-term projects, right now, they're simply not bankable because the business case simply doesn't add up. And we are, again, regulated, so we can't just go and provide all the financing and have a very wide risk appetite as well. So help from policymakers in supporting that transition and making those kind of investments easier for banks to make is going to help significantly. So I think, again, with getting that support from the policymakers as saying, getting the alignment of the global standards harmonization will help significantly. Because right now, a big part of the world, investing $100 in coal versus $100 in renewable energy, same capital allocation, right? I know it's not the case everywhere in Europe, but in the big part of the world, global south, that's still the case. So until we start changing that you incentivize to invest more and more in renewable energy, we're not going to see that big transition happening as fast as we would like it to happen.
In some ways, the policy might even be making it worse, right? You have a lot of subsidies for fossil fuel. You might have tariffs for solar panels. You know, in some ways, it might be cheaper to put 100 into coal than 100 into renewable today in some places. And policy, if it just got out of the way for things like green hydrogen or made a level playing field, might make a big difference.
It will make a huge difference. It will make a huge difference. And I think that's one of the challenges, because a lot of the policies, so we are trying to go through this huge transition, while a lot of the policies we are working under were made decades ago, right? and haven't been renewed, and I think, or rethought. And I think that's also very important that we align that. And I think the point that was made earlier, we need these government transition plans, because that's so critical that we have governments that are basically showing the transition. How are they going to transition towards 2050, and how are they going to align to 1.5 degree? Right? And once we have that, we can, as a private sector, finance sector, really go and support and say, here is a very clear outline, here's a very clear direction from our policymakers, from the governments on their transition. How can we go and make the financing available and support that transition in a good and a sustainable way?
We've heard the word investable projects, bankable projects. Do you have a similar issue with insurable projects, Claudine? In other words, is it that there aren't enough things out there that meet your kind of requirements for sustainability, for resilience, that you would want to then go and insure? Is there a market forming that's needed at this point? Or is it more that there's not enough capital to chase after these opportunities?
There's huge amounts of opportunity, and in fact, we're one of the biggest renewable insurers in the UK. Offshore wind, we've been insuring the offshore wind projects in the UK, and it's hard for insurers. It's hard because it's about thinking. Well, I suppose it's hard for everybody, thinking about whole new business models, because this is what this is about. But I just want to pick up on this point of transition planning and why that's really important for us as well as an insurer. I think it's important because we talked about systems in the last panel, and unless you have someone thinking about the whole system, you'll end up with huge amount of unintended consequences. So if you just take fossil fuels on its own, or if you just take renewables on its own, you will end up with those unintended consequences, like damage to nature, which we want to protect and restore and become even more positive in. So, and land management, and how do you do that? Where do you grow your food, and where do you put your solar panels? Where do you put those homes or office buildings? I think all those things have got to be thought about, but they've got to be at national level. You can't just have it at single finance sector or single finance companies or companies just on their own trying to navigate that. I think once you've got that in place, and you can then understand, okay, this is the role I play, and this is what I'm going to do to be able to make that happen.
Anja, I saw you nodding a bit there. What's your take on this theme?
Well, I like this perspective, the holistic transition plan, because that's something we're thinking a lot about now. And there's been so much focus on climate, and for many of us financial institutions, climate is the major impact area, and where we can achieve the biggest change. But nature's social aspects are also really important to take into consideration, and at this point the business case for nature is not as apparent. So, but we need to start then looking at how can we safeguard human rights, social aspects, and the nature-related risks in our climate transition planning. So I guess that's where we start now, and then I'm really looking forward to advancing with the CSRD. We will get more data, more nature, socially related data from our customers, which will make it easier and support our building of the business case and understanding the challenges and the impacts in the nature space, because those are much more diverse than in the climate space, both regionally but also for different sectors, so a bit more complex to analyze. But over time, I'm really hopeful now that we will get some really useful data points that will support this more holistic transition planning for our customers.
I just want to take maybe 20 or 30 seconds each as we wrap up to hear from you either a big gap that you think people in the audience might be missing when it comes to your work to try to drive forward finance for sustainability, or something that you think is a big, bold idea we should be putting out there as a community. Maybe I can start with you, Antonio.
I go as a, well, I think we've talked a lot about regulation, and yeah, I mean, I wish that would be the best option. I'm a bit skeptical on whether in the short term we're going to have a global level playing field, and I don't think that's going to happen. We should converge towards that when, I don't know. What is important is if I just now address the audience as a financial kind of community, is the power that you guys have to speed up this transition. Sometimes we look at regulations, and obviously for private sector, for companies, for real economy, this is fantastic because it really supports the business case. But some other aspects such as the CSRD and a lot of things that happen in the landscape of ESG accounting is something that you have triggered before. TCFD back in 2017 was a financial program. And it was a voluntary disclosure, and it's triggered a lot of change in the way the companies disclose. So, I mean, from Holcim perspective and as a voice of the real economy, we have ambitious targets. We're putting a lot of money into making this progress. We're changing the way we build. From our financial institutions, I'd also invite you to keep on pushing aside of the regulation, so we can all together collaborate and accelerate the transition.
It's a good message. I'm going to ask you to be our last word, Tomas, just because I'm worried about the time.
Of course.
Please.
So I guess, so no one will solve this alone. So I very like your saying we are competitors, but we are also partners in this. Yeah, and I think it's about the private sector, both the financing sector. I include the insurance sector because when it's about risk allocation, it's also the insurance sector plays a big role. And I'm also very optimistic on hearing kind of the outlook of what the development banks are planning. So I think this can be, but it also must be a powerful combination to really accelerate the financing for the transformation.
I think the opportunity, as you've all heard today in this panel, and I think you'll hear the rest of the sessions, the opportunity is in the convergence, right? It's where everyone comes together, and chief sustainability officers are very much at the front of this. So it's been a fantastic opportunity to hear from all of you. Please join me in thanking this great panel.